Give them some reasons not to, and we'll look at some companies here that maybe you say, gee, I shouldn't take my money from the 401k. I should actually invest it in these companies. Next, we're going to look at is Gap, which is a clother. I think it is called The Gap is the actual name for it. It's funny, the screen here doesn't say The Gap, but I looked someplace else, it did say The Gap. They're in the apparel retail. They have 11.3% short on the float side. So a lot of people think this is going to drop dramatically. Only 64% institutional ownership, so a lot of individual people hold this stock. A good start here, though. The PE ratio is 9.5 versus 14.5 for the industry. Price of sales looks good, 0.6 versus 2.1. Price of book value, 2.5 versus 6.5. And then we do have price to cash flow, 6.4 versus 16.5. And you want these valuation ratios lower than the industry average. No PEG ratio, though, so you can't see what you're paying for the future growth of the company. Now, their earnings over the last year were up 27.8%. Double the industry at 14.3. Could be a problem with the sales, though. Sales are only up 1.1% versus 6.9. We do not see a 5-year growth rate from the analysts. I guess they just don't want to predict that out at this point in time with the tariffs maybe. They pay a decent dividend, 3%, and only use 26% of their earnings to pay that out. Remember, Salesforce used about, 20%, about 25, I think it was. We do see that, let's say on the balance sheet, quick current ratio, 1.7 versus 1.8. That means they got good liquidity. The debt's a little bit high. It's 1.7, double the industry at 0.8, so I would like to see that lower. Generally, if it's above 1.4, we say we won't buy the company, but you might want to look into a little bit deeper. We do see net profit margin 5.8, below the industry at 8.6. Return on equity, very good, 26.5. Free cash flow is only $879 million versus $3.8 billion for the industry. Not looking too good here for Gap.
Yeah, well, Gap, I was kind of curious on their brands because, it's not just Gap. Like, I go to the mall and I'm like, I don't know the last time I went to a Gap. They also have Old Navy, Banana Republic, and Athleta. Frankly, I don't shop at really any. I used to shop at Old Navy, actually, when I was in college.
You don't shop much at all.
Yeah, I don't really shop much at all either. But Old Navy is actually over half of the Gap sales. They should change their name to Old Navy, not the Gap.
and I think Old Navy became very popular a few years ago. It took off.
Well, it's kind of like more discounted, I guess. So I think they're kind of the Gap. I don't know essentially what type of products they sell, but Gap is actually only about 20% of their business. Banana Republic's about 12%, and then their new athleisure brand Athleta is around 10-ish% as well. So I was kind of surprised by those numbers. I did not know Old Navy was that large a part of their business, essentially. Yeah. I was going to put it around maybe 25-30%, but it's not, over half. Looking at the current numbers for Gap, though, it is a current price of $21.95, 52-week range. The low here is $16.99, and the high is $29.29. I do know the stock was flying quite high. I know some of the analysts really like the new CEO. I'm blanking on his name here, but he's got a good kind of rating, a lot of excitement around him. I know he came from Mattel, but the problem is they actually reported earnings here recently, and the stock plunged about 20%. This came even after they beat earnings. They beat sales. But you talked about uncertainty around tariffs. That is really what got them. They didn't include tariffs in their guidance. They did say they think tariffs could hit operating income by about $250 million to $300 million. They're hoping to offset about half of those costs, but they didn't include that in their guidance. Crushed the stock. Again, a 20% decline for a business of this size that's a rough day on the market.
So they didn't say anything about tariffs?
No, it's kind of funny. They didn't include tariffs in their guidance for sales and earnings, but they said tariffs will likely have an impact of this amount on our business. It's like, well, why didn't you just include that in your guidance? Then it's kind of a strange situation. But I was also kind of surprised by this. The big thing I always look at with these companies is how much of the business is China. And this is according to ChatGPT. So I always kind of throw out this disclosure here now because, there's still some questions around how accurate it is, but it pulls in the data pretty quickly for me, especially on air. But looking at it, as of October 2024, only about 7.2% of its apparel was sourced from China. It was the company's 6th largest supplier after Vietnam, India, Indonesia, Bangladesh, and Sri Lanka. So, that is something that I think is really helpful for Gap long-term because I think China is, again, going to be the hardest one to negotiate with, especially with that tariff rate. And the CEO did say that less than 10% of the company's products, again, were sourced from China and plans to reduce that figure to under 3% by the end of 2025. So they're really trying to shift away there.
And, and I haven't heard talk about it recently, last couple of days or so, but the International Trade Court that said the president doesn't have the right to do what he did, has to go to the Supreme Court, that really takes away your negotiating power. I don't. Supreme Court has to decide that quickly. Yeah, I hope they do not decide against it, because that would just throw everything to a tizzy. But they need to decide, because it's kind of hard to negotiate. You're like, well, maybe they can't do it.
It would frankly send stocks up short term if they throw out the tariffs. I mean, it would send those companies with China exposure probably up pretty quickly.
True.
Now, I'm not going to be for that, but again, just kind of putting it out there. I mean, that is the positive from it, I guess.
And I'm looking at the long game, not the short game. So,
Yeah. But looking at the current price, again, versus the target sell price, you go out to January 2027, estimated earnings per share here, $2.37, gives you a target sell at $39.34. Stock trades around 9 times future earnings. I mean, it's intriguing based off the valuation here for the gap. I don't shop there, so that always worries me just a little bit, because I'm like, who is their target customer? Is it growing? Is it not growing? You know, it's kind of funny. We talk about Abercrombie and Fitch. Their stock has been phenomenal. I don't shop there either, but I'm like, shoot, wish would have bought that one.
And I think it depends a lot on Old Navy. So you and your wife, I know you got a baby coming.
And I mean, they got some good kid clothes. I don't know.
Yeah, good. I know they do, but also too, kind of check it out and see what's there. But did look at the debt. The debt a few years ago was a $5.5 billion. Now it's down to $4.8 billion. So they are trying to pay that debt down to some reasonable level. So, all right. Should we?
So would you buy, sell, hold? Where are you at?
That debt just kind of worries. And you know, we have our discipline. Yeah. We won't buy a company with more than 1.4% debt to equity, and they're at 1.8.
Yeah. So even with the valuation, I think you're right. Just definitely not worth it. Especially the risk in retail is so high. Yeah. High debt in retail, I think, is the scariest thing, because all of a sudden you have a little bit of time out of fashion. That's just enough to send you over the edge and put you into bankruptcy.
And this is always difficult, because there's things I want to buy where, like, they look pretty good. This looks pretty good. I want to buy it, but you can't break your discipline, because once you break your discipline, you have no discipline. Yeah. And you got to stay to it. Maybe you'll miss some things, but that will save you more than not if you stick to a good discipline of being safe when you're investing.
It's kind of like, you know, if you're on a diet and you're like, I'm just going to have one bite of a cookie. There's no way I can have one bite of a cookie. I need to have the whole cookie.
Yeah, and then like, well, one more won't hurt. Exactly. Oh, the bag. Oh, shoot, I ate the whole bag. So, yeah, stay disciplined when it comes to investing. You want to talk